All right, everybody. Stocks by the numbers. Welcome back. Today is Friday. We have about an hour to go here before the close, and I just wanted to give just my personal opinion here on a company that I'm sure a lot of you are familiar with. They recently posted earnings. They're taking a big hit here, going from the low 90s, drop down to the low 60s. What's going on? Name of the company in question is Roku Incorporated. Ticker symbol ROKU, listed here on the Nasdaq. Stock trading $64.55, up about 1.25 points, about 2% here on the day, having a slight little rebound after dropping for about 4 or 5 days straight here after earnings. Earnings came out. The EPS was essentially in line. The company beats again on the revenue side, coming in by north of 16 million above analyst expectations. So let's look at some of the numbers here. Roku is a company that they basically produce like a box that you plug into your TV, which kind of transforms it into a smart TV. And they also sell their own TVs similar to Vizio, which we saw was recently stepped in and bought out by Walmart. So a lot of analysts are citing that acquisition as a red flag for Roku. They're supposedly saying that Q1 profits for 2024, this next quarter coming up right here, is going to be potentially lower than what analysts are expecting. However, revenue estimates are actually above expectations here. The company's looking to post around 850 million, they said, forecasting for Q1 of 24. So the revenue side, in my opinion, does seem to remain strong. Market cap here, 9.3 billion. Beating on the EPS side, 3 of the last 4 quarters. Quarterly growth, we can see Q4 seems to be their best quarter, and we had the dip down, of course, in Q1, and then consistent growth quarter over quarter here going into the tail end of the year, minus this big pullback here on the profitability side. It does seem that even though the net margin is negative, it does seem that it's stepping up and heading in the right direction. And if we look annually, we can see the company went from a little over 1 billion a year back in 2019. Now they almost hit 3.5 billion here in 2023. So again, even though the profits may be suffering a little bit, the growth of the company and the growth of their business overall, in my opinion, cannot really be denied here. But let's see exactly how many positives we have, how many negatives we might have here. First, let's pull up the forecast. As we see, we have 2933 analysts looking at this situation, 10 giving it a strong buy, 19 saying to hold, 1 giving it a sell, 3 giving it a strong sell. So actually kind of mixed here. Average price target just a touch below $86, which would indicate about a 30% move from where we are here. But if we look at the performance, the history of the company reporting earnings, we can see here, going back the last 8 quarters, the company has missed only 1 time on the revenue side. And if we switch over annually, we can see the company only came in light by less than 1% on yearly revenue just back in 2021, before and after nice beats. On the profitability side, we can see 2 misses in the last 8 quarters here. On the EPS side, switching over annually, never missed. Now, I can appreciate the fact, again, that the profitability went from positive to negative and really fell off a cliff here for these years. However, look at what the company's forecasting moving forward. For 2024, you can see they're going to chunk this up about 60% and go from minus $5 a share to less than minus $2 a share, to about minus $1 a share, back to net income positivity, and then expecting an even bigger jump up in profitability going into 2027. And off of that, the revenue is expected to consistently climb as well. As you see, posting 3.48 billion for the year here in 23, expecting 3.89 billion in 24, 4.4 in 25, 4.94 in 26, and almost 5.5 billion in 27. So the company's still expecting bigger and better things, and this would show consistent revenue growth here for 10 years. If we fast forward to 2027 and these numbers actually hit their marks, we're talking 10 plus years of steady growth year over year. So this is why I say, in my opinion, follow the money. And with a situation like this, yes, we could have made the argument that at around $90 when they posted earnings, we could have viewed it as overvalued. And now here it's down here in the 60s. So in my opinion, I actually think it's more closer to fair value. And again, we do have some indicators showing some green flags and some showing red. But in my opinion, I actually think that the greens are outweighing the reds here, even though, again, the profitability did drop down. So the company here, holding about $2 billion in cash, as you see, has been consistently climbing quarter over quarter throughout 2023, now up to a touch over $2 billion. The debt was up here north of $700 million and is pulled back here to about the $640, $650 million mark that they've been maintaining. The assets are outweighing liabilities in both the short term and the long term. We switch over here. This could be viewed as a slight red flag because, as we see, we going back to June of 22, and we can see that assets are essentially back in line, even though they went up and then they went down. We're essentially back to where we started, really, roughly 18 months ago, with the liabilities, though, consistently ticking higher. Assets minus liabilities yields total equity, which means the total equity has kind of been consistently dipping 2.31 up to 2.33. As of last quarter. So we're starting to see a potential rebound and the U-turn taking place right here in this moment. The lower the equity, the lower the book value. We went over this, and you can see the book value was north of 20, drops all the way down to 16.19. As of last quarter, slightly ticks upward here to 16.21. So this is why I'm saying we could potentially be in the moment of the rebound, but of course only time will tell. We have to see the next 1 to 2 quarters how the company reports and what their updates are on their forecast and everything like that. The price to sales here was bouncing around here at the 3.6, 3.7 level, as low as 1.8, but here sitting at 2.6, probably basically in line here with the median average. So not necessarily a green or a red flag, really, in my opinion, just kind of remaining stable. Price to cash flow down here at about 35 1/3, going back the last several quarters. We can see that's kind of the lowest it's been. The price to book is now sub 4, and we've had it all the way down at about 2, and we've had it as high as above 5. So sitting here at sub 4, basically in line with the average as well. And obviously, we've seen other companies with stagnated and even declining revenue who were trading, 8, 10, 14 times book value. So sitting here at 3.9 times book, in my opinion, isn't really overvaluing the situation too much. The return on assets has stayed negative. It's been bouncing around, but as you see, was minus 20, jumps up to minus 16%. The return on equity was negative, consistently dropped here to minus 34%. As of last quarter, minus 28.5%, slowly moving in the right direction. Return on invested capital, same story, minus 27%, slightly ticks up to minus 23%. The gross margin percentage has been bouncing around here, dipping to sub 40 at one point, but basically maintaining that low 40 mark, but did go from about 44.5% down to 42.3%, right? So that could be viewed as a slight red flag. However, the operating margin does seem to be moving in the right direction. Was negative as low as minus 28%, and then has been chunking up nicely quarter over quarter here, going to minus 7% lately, and then as of last quarter, now we're at minus 6 1/3%. So some of these metrics are moving in the right direction. The EBITDA, earnings before interest, taxes, depreciation, amortization, was almost minus 25% and has been consistently stepping up quarter over quarter, now sitting here at only minus 3.3%. And the net margin percentage, which of course is one of the main reasons everyone's beating up the stock, as we see, was big negative, bouncing around, got to the minus low teens there, and then plummets back down to minus 36%, but now reverses, and now it's only less than minus 8%. So again, even though some negatives are here, I just feel, in my opinion, that the positives are outweighing the negatives. The inventory turnover has been bouncing around here from the high teens to even the high 20s and dropped down to sub 17.5, but now as of last quarter back up to 20, right? So we do have these little peaks and valleys here with some of these metrics. However, the company does overall, in my opinion, seem to be maintaining that, though the average, really, for the most part, at least going back for the last 7-8 quarters. The asset turnover, again, is essentially like how much money the company is generating off of said assets, how well they're utilizing their assets. And as you can see, even though we looked at the assets and the liabilities bouncing around, we do have asset turnover, getting up to 0.8 now, basically the highest it's been going back the last 8 quarters. So that's why, in my opinion, again, I do see a little bit more positives than negatives looking at the numbers and looking at the overall growth of the business, which is why I wanted to make the video here, because again, it was flying high and it was up at 90, and now it took a hit and it's back here, at these trend lines I'll speak about in a second. So that's why, in my opinion, I mentioned yesterday, in my opinion, if I did want to take a position in Roku, I would probably begin piecing my way in here in the 60s. And obviously, if it happens to break the trend line and drop into the mid 50s, you could always add to the position and slowly average down. But over time, it does seem that most analysts are still expecting 80, 90, 100 plus over the next 12 months here with Roku, expecting that slow and steady rebound to take place. And in my opinion, I agree. And looking here, I just wanted to show these trend lines here to you guys. I went from, this is December 28th, 2022, connecting to October 30th of 2023. You can see I went from the absolute bottom of the wick, connecting to the absolute bottom, coming across, and you can see that is where the stock basically bounced recently. I also drew another trend line going from the bottom of the body of that candle, connecting to the bottom of the body on that candle, and coming through. And you can see it dropped down, and now it's kind of bouncing inside of that range. So recently we can see we had the quick little flash crash through the trend line, and then it pops back up and it closed above the trend line, and then you can see it comes down to retest the trend line, but then pops back up. Now it's above the second trend line. So this may be near the bottom. However, we also do have the potential to go a couple of dollars lower. So I don't want to make it seem like, oh, this tech analysis is flawless and we're going to start running from here. That's not what I'm saying. I'm just pointing out how it reacted to the trend lines that I drew out. So let's switch over here to stock charts very quickly, and we can see also that we could have a slight bump here because the RSI did dip below 30 now, right at this point yesterday. Still below 30 here on the daily, sitting here a touch below 29, but yesterday dipped down probably to about the 27 and change level, and now you can see a little pop here, about 2% pop here on Roku here for the day. So the stocks can't always go down. They can't always go up. That's why we have to look at all these indicators and see where we could have potential pullbacks or potential pops. The MACD obviously fell off a cliff, but in my opinion, again, looking at those trend lines and seeing that the stock has kind of been in this range going all the way back to right before the bull dropping here for 2023, we're talking about like a 14-month range here. So that's why, in my opinion, I do think it's probably going to, I'd say conservatively, retrace to about half of what that loss was. And I'm looking right there maybe at the high 70s, maybe about 78 and 3/4, 79, right to where that gap down was, right? Because it probably most likely, in my opinion, won't immediately retrace to that 90 plus level, but maybe we can get the high 70s, potentially 80. But I do think, again, the MACD may potentially flatten out here soon and begin to curl back to the upside. We looked at the RSI there on the daily. Switching over here to the weekly, this was one of the other red flags that I mentioned on the technical side, because the RSI sitting here right around 38.5 hasn't technically hit that 30 benchmark level, so they could continue to beat the stock up moving forward for the next couple of days. And looking here on the weekly, you can see the bottom Bollinger Band is down at 57.78. So whether we feel personally the stock should go there or not, it could go there, right? That's the point I'm trying to make here. We could potentially continue to sell off right around like another 10-12%, whatever that might be. And that's why I always say, in my opinion, you should consider piecing into a situation, especially for the longer term. Slowly work your way in, right? And that way, if it starts to run from this level, if you bought recently, if it starts to run up and rebound, then hey, it's great. You bought some, you're up a couple of bucks. If you slowly piece your way in, and now it does dip down to 60, sub 60, 58, 57, now you can add a little bit more to the position, lower the cost basis, right? And consistently piece your way in. That's why, in my opinion, I say, especially for the longer term, that's probably the better way to play it. But that's just me. Everyone's different. But the MACD, of course, recently crossed to the downside here. We had the big drop. We broke this 50-day moving average, 74.92. And in my opinion, we do have the potential to come a little bit lower down there into the high 50s before kind of bouncing back, getting to the mid-high 70s and trying to reclaim some of these moving averages. So in my opinion, again, it could potentially go lower, but I do see it soon probably retracing back into the 70s. And even here on the daily, we can see how it immediately dropped down to the 200-day, tried to get above, and then rejected. So in my opinion, again, about that 78 and change level, right where the 200-day moving average is and right where the initial gap down took place, I do feel that again, it's going to take some time, but chances are, I'd say from this point, even if it does go down first, I'd say, in my opinion, there's probably a higher probability that it will, continue to bounce down and then slowly rebound and climb back to these levels over the next couple of months on anticipation going into next quarter's earnings. Because again, even though they're beating the company up on the EPS side, the company is expecting consistent growth here on the revenue side. But we can see Cathie Wood. I don't know why they consistently put out headlines of this woman. I don't know. I honestly don't know who she is. I don't really follow these people on Wall Street, but I understand she's running her fund over there, and it's really all about like these tech names. So everyone's obviously following what she's doing, and they're consistently updating you on what she's doing because she's basically buying like the same 9 names that everyone on YouTube speaks about and trades and invests into. So I guess they feel they need to update you on what she's doing, but yeah, we had the Vizio acquisition. As you see here, Roku price target maintained with a $100 share price target here by Needham. Respect to Needham for sticking by their analysis. 25 million worth of Roku shares. Bear with me, bear with me. One bear now sees challenging brewing on, quote, all flanks. I don't know what that means. What does that mean? Shares on quarter of their value. One analyst sees the media streaming company, quote, at the precipice of being squeezed by the emergence of challengers on all flanks. What is it, Street Fighter? New challengers emerging? Like, what the heck's going on? That's what I mean. Same thing with Fubo, right? Same thing with Fubo. Oh, well, these 3 companies are teaming up for a joint venture. Oh, now a new competitor emerges. Yeah, listen, that's a great story. Fubo has been rocking and rolling. Now they narrowed their losses. They're beating on the EPS side. They're growing revenue consistently. Just signed a deal with BKFC. Bare Knuckle Fighting Championship. I mean, the company is doing good business, it looks like, in my opinion. But that's what I mean. They put out these headlines to try to bash these stocks that were already doing well and were growing nicely. So that's why a statement like that makes me laugh. So this guy's over there playing Mortal Kombat or something. First mover advantage in streaming could dwindle as bigger players encroach on its turf. And he now wonders if a tipping point is on the horizon. Of holding operating market share in an increasingly tight market that includes Amazon that want to do it themselves or at least get a revenue share. Amazon resubmitted materials. Rated a sell with a 66 target. Well, that's still higher than where it is right now. Jeff Bezos apparently selling $6 billion worth of Amazon stock. Disappointed that the company implied platform revenue could grow at a similar rate in the first quarter to what was seen in the fourth quarter. The lack of platform revenue acceleration and likely decelerating growth through 2024. Okay, that's an assumption. Bucks a trend seen for most of 2023. Said he'd, quote, rather wait for more clarity on the platform business before getting constructive. See that? What I say before, right? I pointed out the cash as well, right? Because I'm not an idiot, so we look for positives. We try to look at all negatives as well. Though he acknowledged that Roku's improvements to free cash flow and roughly $2 billion cash pile were, quote, hard to ignore. See what I mean? So they know there's value there. But that's what I mean. When a company might not see immediate positive results, or if they forecast anything but immediate massive growth quarter over quarter in revenue or in profitability, they try to bash the crap out of the company, right? But the growth year over year in revenue cannot be denied. The growth of the business cannot be denied. They're holding $2 billion in cash. That cannot be, that's, quote, too hard to ignore. So that's what I mean. They know the positives are there, and they see that Roku is climbing. But if they can beat it up on the profitability side, then they will. Because I'm sure there are a lot of other people who were saying, man, I wish I could get a piece of Roku, but I don't know, at $90. Oh, hey, guess what? All of a sudden there's some negative headlines coming out, and the stock took a 33% hit. Now you can buy it for $60. There you go. You're welcome, right? So who knows how they're really thinking about that. With everything, all the news that's been coming out recently, honestly, I wouldn't put it past these people. Oppenheimer moves to the sideline, writing that the stock could struggle for momentum until the company, quote, sustainably can grow platform revenue at a high teens rate. He expects 9% growth. Imagine pissing on 9% growth. You know what I mean? Just think about this. Oh, I was expecting 16, 17. Now it's only 9% growth. 9% growth, in my opinion, is phenomenal. Technically outpacing inflation, right? Quote, while we are positive on new management strategy to embrace programmatic demand and increase data integration to drive performance-based campaigns, high percentage platform revenue driven by price increase, meaning these areas are expected to struggle for most of 24. There you go. Webb Bush, almost perfect. Quote, despite industry-wide headwinds like lower media and entertainment spending, we think Roku's initiatives will result in revenue growth higher than we modeled, which, together with improved expense management, what did I say? Get the expenses in order, see where they can stop the bleeding, try to make themselves more efficient in the numbers, should drive consistent EBITDA growth or growth in a... So that's what I mean. They can try to beat it up, and they can try to mention the negativity here about the revenue that they're generating. Look, average revenue per user falls, right? But look at the numbers though. Revenue in the quarter ended December 31st rose to $984.4 million from $867.1 million a year earlier. Analysts were expecting $967, right? We looked at that company coming in almost $17 million above analyst expectations. Roku's Q4 average revenue per user trailing 12 month was $39.92, down from $41.68 a year earlier. Oh no! Not $1.70 per share. I mean per user. Please tell me not $1.70 per user. Of course, users are up. And they also said that there was a record number of billions of hours streamed on Roku, right? But somehow they're looking at see that's what I mean, man. In my opinion, I feel that these institutions, they know who the growing businesses are. They know who the winners are. But if they can beat them up at any point, so others can potentially scoop in and buy up some discounted shares, then they're probably going to keep playing that game, in my opinion. Right? And like we always say, we'll read an article like this, they'll beat it up in the short term, stock's getting hammered, it's down 30%, what's going on? And then what happens? They want you to forget about it, they want you not to talk about it, they want you not to look at it, and then they're slowly going to climb it up back into the 70s and potentially the 80s, and then the company's going to post earnings roughly 3 months from now, and all of a sudden everything's going to be fine, the EPS might come in above expectations. They already said they're probably going to beat on the revenue. Look, it says right here in Q1 the company expects revenue of $850 million. Analysts in a poll, $834.8 million. So they're already letting you know that we're probably going to beat on the revenue side in Q1 of 24. So yeah, I guess you can say this is down $1.70 per user or whatever, but the amount of users is growing up, are going up, excuse me. So that's why they can try to beat it up on the profitability side, but I think they see the big picture here. Almost perfect quarter again. My apologies. I just wanted to run through some of these headlines here. Roku price target maintained 120 by Wedbush. They're expecting a 100% move here from this level. That's what I mean, because they see a business that is growing. Roku tumbles as stiff competition from heavyweights, dense outlook. If you expect me to believe that now, in the beginning of 2024, after this streaming has been going on for years, that all of a sudden they're getting competition, like, you know what I'm saying? It just doesn't make sense. It doesn't add up. It doesn't add up to me. I'm sorry. Susquehanna raises price target to 110 from 100, maintains positive rating. And see, you have something like this. Oppenheimer downgrades Roku to perform from outperform, removes $100 price target. How do you just remove your price target? That's what makes me laugh. This is an analyst. You are literally paid to analyze the situation and give your opinion on the stock. And you remove your price target. Don't adjust it. You didn't adjust it. You didn't increase it. You didn't decrease. You just removed it. Right? So your job literally is to analyze the company and say whether it's a buy, hold, sell, and what price you think it's going to. And you remove your price target, which means you didn't do your job. Right? You had one job, and you didn't do it. So, I don't know. See, that's what I mean. If someone like that worked for me, you'd be fired. I would fire you just for that. Cuts price target on Roku to 88 from 93. Maintains outperform rating. Q4 net loss narrows. Revenue rises. Sets Q1 revenue guidance, which again is expecting to come in above analyst expectation. I don't know. You look at it like that, it sounds positive. $80 million active accounts. But where was the one that spoke about the hour? Here we go. Roku users streamed record 29.1 billion hours in Q4 and 106 billion hours in 2023, the first year in which Roku surpassed 100 billion hours. And you're worried about the profitability for the next quarter coming up. You see what I mean? Missing out, in my opinion. They are missing out on the big picture here, just trying to beat it up, in my opinion, in the short term. Platform revenue up 13% year over year. And look at this too. Roku reports active accounts in Q4 of 80 million versus Visible Alpha analyst consensus estimate of 78.7 million. So they came in 1.3 million more active accounts in that quarter than what analysts were expected, and coming in almost a billion more hours above what analysts were expecting. So more active users than analysts were expecting, more revenue than analysts were expecting, more narrow losses than analysts were expecting, more hours streamed than analysts were expecting, but the stock is going to go lower and people are lowering their price targets. When you lay it out like that, it might not make much sense, does it? This is why I'm saying, again, I know, we kind of got boring and quiet here in the last couple of minutes of the video, and I apologize for that, but I was just slowly, tracking down and going through some of those headlines. But this is what I mean. Overall, in my opinion, should the stock have taken a hit? Yeah, I can understand that. Again, we could have made the argument at 90 plus, it was a little overvalued. And again, they're potentially saying that Q1 profits now may be a little bit lower than what we're expecting, so you want to beat the stock up. Okay, fine, understandable. To completely bash it down and just try to make it seem like it was so much more worse than it is. You know what I'm saying? This is why, in my opinion, I don't even trust these analysts. But again, that's just me. That is just me, my opinion. It's really hard to trust them. And remember, before you jump down my throat, we did an update video recently of the headline saying on SMCI that $800 might be a good selling point. And the stock immediately rebounded like a day or two later and hit what, like 970 or something the other day, right? But 800 might have been a good point to sell. You understand what I'm saying? And same thing with that Oppenheimer analyst. Oh, I'm downgrading it to perform from outperform, and I'm just removing my price target. It's your job. What do you mean you're removing your price target? What does that mean? That's what makes me laugh about these situations. So, went on for longer than I wanted to, and again, got kind of quiet because I was just kind of sitting here just talking to myself, having a conversation in my mind while I was reading some of those articles to you guys. And I gotta say, in my opinion, I actually think that this may be an overreaction. I do think that this is an overreaction, in my opinion. Again, we're trading, 2.6, 2.7 times yearly revenue. We're expecting continued increases in revenue forecast and EPS side as well. The company expecting now 24, 25, those losses to seriously get in check and eventually go net income positive for the year. Already saying that they're going to post 850 million about for this quarter coming up. You can see here, even these estimates are sub 850 million. So technically the company is saying that they're on track to beat this estimate here in about 3 months' time. Yeah, I don't know. In my opinion, I like it here. And again, these trend lines in my eyes were very key. And seeing the slight drop down there recently and then having it immediately come back up, in my opinion, I would consider personally, in my opinion, beginning to build a position in Roku. And again, in my opinion, it doesn't look too bad here at about 64. And if they want to keep beating it up and bring it down into the 50s for you, well then, like we always say, if we liked it at 64, we'll love it at 57. So, yeah, I'm going to end it there. And again, I apologize for the dullness there in the last couple of minutes of the video, but I just wanted to try to go through as much as I can. And yeah, the operating margin percentages we saw, right, slowly starting to climb, slowly heading in the right direction. The EBITDA percentage slowly climbing, heading in the right direction. Revenue consistently increasing, and again, remember this too. A lot of people out there may downvote the video. They may comment, "Oh, I just bought puts. You don't know what you're talking about." Listen, that's fine. That's fine. I have no problem if someone disagrees with me. However, let's go to one of your favorite companies, probably, in DraftKings, who is losing money per share, who is worth significantly more, right? They're worth more than double the market cap. And look at this. Essentially the same revenue for the year compared to Roku, with a little bit more of a loss on the income side. And just remember, this is what I always say to people. Now listen, I understand that a lot of these revenue numbers have been growing. People are getting pumped about them. The net margin percentage negative numbers are trending in the right direction, just like Roku, right? Just like Roku. But the difference here, This is a company that runs a freaking gambling website, and their net income negative. And you expect me to believe that we should beat the crap out of Roku because of their net income negativity? Nah. Nah, I'm sorry. I'm not going down that road. I do like Roku here at these levels, I will have to say. And if you want to beat me up because the stock goes from 64 down to 57 first, listen, that's fine. That's entirely your own prerogative. Because like we always say, if we feel it's a buy at 64, 65, then we're going to absolutely love it at 56, 57, 58. And that's it. I'm going to end it there. So once again, stocks by the numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is all I ask from you guys. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by, and have a great weekend.